So Business Morning is live streaming on channelstv.com. You want to grab the show there live if you have no access to the traditional tabletop television, or if you want to get in the social media and be part of the conversation, have your say, express your views. You have questions and comments you would like us to consider and push forward. I'll put it into our Twitter account as Channels TV or at Biz Morning. Or at CTV Harris. She's the show anchor, and I am always a partner in business. That's B. Bolson there at B. Bolson. Just get me involved in the conversation as usual, minding your business. Meantime, this is what the week looks like. It's been a very busy week. President Buhari delivered the 2017 budget proposals to the National Assembly, 7.3 trillion naira. That's about 23.9 billion US dollars by today's exchange rates. That's budget, with a number of assumptions, has received some kudos and a few knocks from the analyst community since it was released about 24 hours ago. Meantime, the details of that budget will be presented on Monday, and the media will be there. Channels Television will be there with the Senator Udoma's Ministry of Budget and National Planning to break it down for us what the President presented to the joint legislative chambers. Meantime, well, not unexpected, but again, of course, inflation, whenever it comes in and is higher, folks seem to get a little bit upset by the inflation data. 18.48 was where we finished off in November, driven largely by food prices. Meantime, you saw that a few minutes ago, Nigeria is signing a major exit agreement on the contentious and sometimes naughty JV cash calls with 6 oil majors. And late yesterday afternoon, the unemployment data came out. Nigeria's unemployment figure trended higher to 13.9%. The number of economically active population in Nigeria also went up by 1.26% to 108.03 million Nigerians. In other words, you have 103 million people to be actively at work, just as I am at the moment. I'm doing other things. Whatever you're doing, what you call the blue collar, the white collar job, and those who are massive Nigerians or artisans and SMEs, folks who need to be actively engaged. That figure is 108.03 million, and that keeps increasing. And that's something you need to think about. Meantime, the market's a little bit topsy-turvy for the fixed income on one side, equities a little bit nice on the other side since Monday started. Naira remains slightly unchanged at 305. That's the benchmark for the budget 2017 assumptions. We'll leave those things there. Let's bring in Ayodele Akinwumi, who is the head of research at FSDH Merchant Bank, and they released what they call the monthly economic and financial market outlook, looking at the exports of oil production, the OPEC decisions, the budget, inflation, squeeze everything together to get a sense of where money should go and come back into your pocket. Ayodele, good morning. It's nice to have you.
Thank you very much.
We appreciate that. This must be a very busy time for you analysts, squeezing both global picture, interest rate decision in the US, the OPEC decisions in Vienna, the one in Moscow with Russia, squeezing that with inflation, interest rates, MPC. What's your summary here of the economic and market outlook?
Thank you very much for having me. It's quite a very challenging environment brought from the domestic economy and the external sector. We've got a lot of contraction. We've got a lot of in the GDP, in the economy. We've got rising inflation rate. We've got rising unemployment, like you mentioned earlier. This week, the FOMC of the Federal Reserve system met and hike interest rate for the first time this year, and that has a lot of implications for the Nigerian economy. All these, again, like I mentioned earlier, we had the budget presentation this week. Yes, it wasn't a very aggressive budget. If you look at it from the inflation perspective, the exchange rate perspective, adjusting for it, just a marginal improvement from the inflation adjusted growth. But on exchange rate is actually a contraction. But what is important for us is actually the policy trust in that presentation, that which the federal government will use to grow the economy. I mean, we have always been saying it. here that it's not really actually about the budgetary spending that will lift the economy from the current level. So we think it's laid down some policies, even though it's been delayed, but then we informed us that it may likely come to life early next year in terms of the joint venture of the PPP, the public-private partnership model that we are developing to grow the infrastructure. Government cannot fund the level of infrastructure deficit we have in Nigeria today in the next few months, few years from budgetary allocation. Now that's on the one side. I think is positive for the economy. We also roll out the abolition of the joint venture cash cost, which you discussed earlier. For us, it's also a lot of development for the economy. The IOCs will go and fund those projects. From what we speaking to them, they like that. It will create activity from that level. Now, put all this together, we think that investing public, of course, the rising inflation is causing high yield on fixed income securities, and of course, on account of the weak exchange rate we have at the moment. But it's good because now people still have another channel to invest in treasury bills and fixed income securities that is quite high at the moment. But even though equities has been having a batching from that. But from the current low level of equities prices, we think with appropriate policy directions that will drive private investment into the economy in 2017 and bring in foreign capital to the economy to develop the infrastructure, we may likely see an appreciation in economic activities.
Yes, from the equity side of things, and we have a few sides of the market on the table to speak to, but from the equity side, do you think the overall fiscal economy will be a major catalyst for the equities investment, not just from foreign portfolio investors, from the local portfolio FPIs, as well as retail investors?
I think so, because if you look at the fact that in the last few months, there has not been the result that companies are declaring has been very poor, reflecting the weak exchange rate. So we have seen a lot of the foreign exchange losses that these companies are developing, and this is not inspiring confidence into from the investing public. PFAs are locking in now in fixed income securities. But then if we have policies on ground that will lift the economy, that will make the economy to do better, companies will be able to make more profit, companies will be able to sell their goods, companies will be able to have more money for what they are producing. It will filter into the equities market, and investors will take advantage of this, both local investors and foreign investors.
Don't you think that the fixed income folks have had their day in the sun, as it were? They've had a bullish run for the last couple of years, again since the end of the boom in the equities market. It looks like everybody just moved to the other side of the road, of the street, and you've seen double-digit steady yields on FGN papers and as well as treasury bills. Do you think that market is overdone, and somehow things need to move back to the equity side, because the fixed income side is basically government borrowing anyway? So government can't keep borrowing and borrowing and borrowing. You need the private sector, which is where the equities market really is, to borrow money and to create wealth on a sustainable basis for domestic investors.
Okay, I think that there has been a lot of clamor about the single digit, the fact that government is borrowing very high, and you are crowding out the private sector from having access to funds in the financial industry. Unfortunately, you can have a high inflation rate at 18.48. The latest one, our forecast shows that it's going to inch up a little bit in December and probably January. Of course, if the rumor we are hearing that they may likely increase the pump price of petroleum product, if that happens, it means that even from January, February, it may likely go up further. But let's leave that one aside. So, and you have a weak exchange rate. You need high yield on fixed income securities to attract funds. A couple of months back, we heard about the pension funds. The PFA complaining about the fact that the pension assets are under threat because of the rising inflation rate in the market. And it's very simple. Why do you have to save? You save because you postpone current consumption because you think that in future you will be able to, you are better off. So if price of things are rising faster than the rate at which you get return on your investment, it is better for you to spend now. right?
So that's a bit of, so that's why a bit of, you're also seeing a bit of withdrawals from folks that are taking their pensions now and spending because other sources of income looks a little bit tight.
Yeah, even yes, I mean, although there are a lot of regulations about how you can withdraw from that. I mean, you just read out the unemployment rate that was released last year. What that shows is that even the contribution to that pension funds is going down because of the fact that it is people who are out of jobs, and there's a threat on it. But then if people don't have real positive yield on their investment, it's a disincentive to savings, and therefore people will not save. And therefore we have to balance all these things. But I mean, if you look at the movement in 40 oil in the last 1 month, is done over 100%. So 18%, 21% yield on fixed income securities, if we get our economy right. For me, equities can grow faster than that and will make people to have that. But you can't have the current challenges and you expect government to be burdened at single digits. Nobody will give the money to government, and government needs to spend some money to keep the economy going.
Let's get back to the fiscal side of things, and there's some of your assumptions here and conclusions is that perhaps some positive pronouncements this month should help the market move forward. Aside the budget 2016 that is being presented, are there any news from the government side you're looking at or you're respecting that you think would impact positively the market side of things? Okay, so
we have listened to the budget. We've not got a detailed breakthrough on, the breakdown which you said earlier
is going
to come through on Monday. We expect to have that also and digest it better. Government now needs, they have told us that they are trying to develop an homegrown policies to develop the infrastructure in the country, in the PPP, which we had been advocating for a very long time because government does not have money to do this. Now, these engagements, the actual policies to drive what they want to drive private investment, as they continue to engage private sector. Around November, you were there when the Nigerian signed an agreement with Moroccan government on several agreements, and one of these is to develop a fertilizer plant in Nigeria to produce, to increase the productivity in agriculture. Now, if we as government roll out more policies and private sector businesses look at them and see there are ways to make profits in this area, business decisions will be taken, investment decisions will be taken, and therefore it will filter into the economy. More jobs will be created, and all the impact will feel the impact on the equities market. So those are things that we said that may likely happen. In the last 3 years, 2015, 2014, 2013, we saw that equities market picked up in December versus October, versus November. The last 1 week we've been seeing that, but it depends on, the market has actually changed. It depends on what government is doing, what the government is saying to inspire confidence. There are a lot of opportunities in the Nigerian economy across board, but then people need government policies to enable them to take positions, government policies to enable them, the consistencies in the policy and how it inspires confidence in taking investment decisions. And these are the things we think that as they engage us better, people, it will inspire confidence.
Okay, in just 1 minute to wrap it up, do you agree with the basic assumptions of the budget 2017, oil price, exchange rate, and production output estimates?
Well, I do believe that with those budget assumptions, they are good for me. However, we looking at where we think oil price will go to in 2017, $42 per barrel is not ambitious. Production 2.2, government needs to engage Nigeria Delta people, solve the problem. I'm very happy the fact that they're going to continue the amnesty program for Nigeria Delta, and they have also increased the allocation to that sector. These also should make us to achieve 2.2 million barrels per day. If we do that with the exchange rate, I think it's something that will make them to achieve what they want to achieve. But like I said, it is a policy thrust that will drive investment. 7.3 trillion is not enough really and of course just 30% of that for capital expenditure. It's not enough to drive the economy. It is a policy that will drive the economy.
What's the figure you're looking at? Do you think we need a 10 trillion naira budget, perhaps 15, perhaps 20?
You know, we talk about
Give me a figure.
It's difficult to give a figure because too much of these figures also may be inflationary. We need government to give us...
That's balancing it. That's balancing it. Too much money is a problem. Too little, you don't have enough. It's a very difficult one. Thank you.
Thank you for having me.
Let's think about it over the weekend. And again, I would like to hear from you. Ayodele Akimomi from FSDH Merchant Bank. We'll be right back.